So it's no secret that the stock market's been pretty crazy the last few days. A lot of red, a lot of companies in the red, like Apple, Amazon, and even Tesla are showing that they're subject to market dips as well, seeing lows of $650, which is insane. So, what this has really highlighted is the importance of having a good, solid investment strategy and sticking to it for the long term. So, one of the first questions you need to ask yourself is, are you a short term or long term investor? So, there's lots of different types of short term investing. One of them is day trading, where you'll see people on Instagram and YouTube looking at these fancy graphs, generally associated with some gurus who are trying to tell you that they can 10x your money in 7 days and things like that. All jokes aside, though, day trading is a very effective way of making money very quickly. It does require you to have a very extensive skill set, though. You need to keep up to date with market trends and be really, really up to date with news coming out about companies that you're trading with. Other examples of short term investing are CFD trading, short selling, swing trading, and momentum investing, which is essentially jumping on hot trends, riding current waves of investing like GameStop and AMC, for example, recently. So, with short term investing, it's a very active strategy. You're constantly looking for news on companies, staying up to date with current market trends, and just keeping an eye on the active market. It can be a lot higher risk. There's a lot more opportunity to use leverage and debt when doing short term investing. It can be difficult to calculate taxes at the end of the year as you have thousands, tens of thousands of transactions in some cases building up over time. And one thing to consider is it can be very time consuming, and it's quite unrealistic to think that you'd be able to do this alongside a full time job and give it your full attention in order to get maximum profits. Now let's look at the strategy that I use and I would recommend to beginners: long term investing. So while long term investing doesn't require you to have your head in charts and graphs all day, it does require you to have a good understanding of fundamental and technical analysis, especially if you're investing in single stocks. So different types of long-term investments could be actively managed funds, where a fund manager will decide on a portfolio, pick certain stocks, and actively look after the fund that you contribute to. So you have no direct choice on where your money is allocated. Someone else is looking after that in the background. You could also put pensions into this as well if you don't actively manage your pension and your pension provider manages where the funds are allocated. You have ETFs and index funds. I've done a whole video on these and the ones I'm invested on, so have a look at that if you haven't checked that one out. These are a really good passive approach of buying a little chunk of the market and watching it grow over time. Another one is dividend paying stocks. A very popular way of doing this is to invest in blue chip companies who've been around forever, like Apple, Coca-Cola, Microsoft, Facebook, and companies like that who pay a good regular dividend. And the idea is that you reinvest that dividend, which grows and grows over time and snowballs into a healthy profit. So another long-term investing strategy is value stocks or value investing, where you'll identify through your technical analysis a particular stock that is undervalued in the current market. You'll then buy that stock at its low price and then watch it grow over time and hopefully make a decent profit. Another good strategy is investing in growth stocks. This is where, through your fundamental and technical analysis, you'll identify companies that have the potential for enormous growth in the long term. So companies that are pushing the boundaries in terms of innovation, companies like Tesla, who are innovating in terms of electric vehicles, robo taxis, and things like that. Palantir with artificial intelligence. So companies that have the potential to 10x over time. So with long-term investing, your goal is to have your money working for you in the background, not you actively working for your money. So a long-term investing approach is definitely more passive. It's as passive as you want it to be. You can hand off your money to another entity and leave them manage it for you, or you can take a little bit more of an active approach, but it's definitely not as active as short-term investing. There's a lot lower barrier to entry, so you don't need to be a financial expert to get started. You don't need to start with a lot of money. It's a lot more sustainable in the long term. Market corrections won't affect you as much. In fact, you'll welcome them, as it will lower your dollar cost average and improve your profits over time. It's also a lot easier to be a long-term investment alongside having a full-time job, as it doesn't take a lot of your time to get involved. There's also less tax overhead with long-term investing, as you're only really paying taxes when you sell your shares. Now, this isn't completely the case, as you do need to pay taxes on your dividends, and with the deemed disposal rule of having to pay taxes on your ETFs every 8 years as well. I've done another video on taxes if you want to go and watch that as well. So what kind of investor are you? I'd love to hear your guys' strategies in the comments below. So as always, thanks for watching guys, and don't forget to give a like and subscribe, and I'll see you in the next one.